Okay, so today I want to talk about Robinhood. First, I'm going to tell you a story about my buddy Kyle. And I actually spoke about Kyle in my last video about reverse repos. Okay, so the first time Kyle decides he wants to trade stocks, he goes to his local bank and says, guys, I want to set up a self-directed account so I can trade stocks. You know what happened next? The teller laughed at him and said, you think you could trade your own money? What are you, nuts? Do you know how hard that is? No, you need to talk to one of our financial advisors. Okay, so Kyle's experience is actually pretty common. And it's incredibly intimidating for any young person who's trying to set up a trading account for the first time, and then an app like Robinhood comes along. They don't have to deal with that bank teller making them feel small. They can just go and set up their account and start trading. So today's video is about Robinhood, how they made finance accessible to young people, and whether or not you should consider buying the stock. But before I start, please smash that like button, subscribe, and ring that notification bell so I keep making more of these insane videos. So Robinhood is a trading app. The company was founded around 6 years ago and today has over 18 million users with an average account size of around $4,500. Okay, so the business model is pretty simple. So we got a user, they download an app called Robinhood on their phone. They can now buy and sell stocks. So Robinhood's going to act as the broker here. They're then going to route any of those buy or sell orders over to the market makers such as Citadel, Wolverine, Virtu, you name it. And ultimately, Robinhood's going to get paid for sending over that order flow, of which the market makers can make a very tiny spread on having so much volume. What ultimately happens next is that Robinhood's able to offer those users commission-free trades in exchange for being a part of that big order flow. Not really a great idea if you want to be a day trader, but if you're planning on holding positions long-term, heck, it's not a terrible deal. There's really two important takeaways here. One, we got a disruptive platform, and two, we've got a demographic of the user base that's really important. So the company reports about 50% of their users are first-time investors. This has, your conventional discount brokerages like E-Trade, Charles Schwab, Fidelity, and TD Ameritrade reeling. They find themselves on the outside looking in, but the demographic that today may have an average account size of about $4,500, in the future, the people who are in this demo, they're going to find themselves growing in their careers, taking an inheritance, and finding other ways to make money that's going to ultimately grow their net worth, which they're now using a platform called Robinhood at a very, very high penetration rate. And the best part is that the company is reporting that 80% of their user growth is coming from referred or organic users. In other words, this app is growing faster than a mogwai after midnight caught in a room with a fire sprinkler. Okay, so getting back to my friend Kyle I was talking about earlier, this is an experience young people are having all over. They were nervous to trade. Suddenly they find themselves on an app where all the roadblocks are taken down. They can download it. They can even trade options or crypto. Now, in Robinhood's mission statement, they make it clear that this is a goal. They say Robinhood was founded on the belief that everyone should be welcome to participate in our financial system. We are creating a modern financial services platform for everyone, regardless of their wealth, income, or background. This is an important theme, and we're going to keep coming back to it. Okay, so Robinhood's growth has been electric, growing from $3 million in annual revenue to hitting north of a $2 billion annual run rate based on their last quarter. So, of course, there's going to be hiccups with this kind of growth. Back in February, GameStop started running like crazy, led by Roaring Kitty and Wall Street Bets, and while it created a whole debacle over the company's inability to provide clearinghouses with the required capital to keep trading, they ended up temporarily restricting trading on certain stocks like GameStop, which really pissed off their customers. So at the time, Dave Portnoy goes on Twitter and he says, I own AMC, Nokia, and Naked Brand Group. I bought them with the understanding we live in a free market where people can buy and sell stocks fair and square and at their own risk. I will hold them till the death as a reminder that Robinhood app founders must go to prison. Okay, so if you looked at the most recent filings, you're going to notice in Q1 they lost about $1.4 billion in net income. This was largely due to the fact that they had to raise money to the tune of about $3.5 billion at a 30% discount to the IPO price, and in addition to that, give some sort of a warrant. This resulted in about a $1.4 billion fair value adjustment, which wouldn't have been an expense hit, but they couldn't do straight equity because they had to sweeten the pot with the convertibles and warrant due to the liquidation preferences in previous rounds. So if you're the kind of investor who likes to look at financials and fundamentals, you just got to understand that that $1.4 billion fair value adjustment is not going to be recurring. It's not cash-based, but if you're trying to understand this fundamentally, you're probably more concerned with adoption and user growth anyway. Changing gears, let's talk about risk for a minute. So the majority of the talk about risk is people freaked out about the regulatory risk. This is the idea that they could get shut down from selling order flow, which is how they generally generate most of their revenue. If this risk comes to fruition, I don't think it's that big of a deal. They can just start charging for trades. This risk also exists for major discount brokerages. In fact, if you go through payment for order flow stats, TD Ameritrade actually has the highest amount of fees received from payments for order flow in the first half of 2021. So in other words, this isn't just a risk for Robinhood, it's really a risk for all the discount brokerages. Another major concern from glancing at the S1 is where the company talks about how 70% of their revenue comes from cryptocurrency transactions, with one in particular, Dogecoin. which made up 34% of the overall crypto transaction revenue, or about 6% of overall revenue.
Dogecoin traded around 5 cents for most of Q1 and really picked up towards May.
And that's when Elon made his famous SNL appearance and Dogecoin appeared to top out. This leads us to believe that if the price action is any indication, Q2 should probably look pretty good for Robinhood. Okay, so on a fundamental basis, if you're looking at financials, you can probably argue that the company's overvalued. But that's not how the market works today. Robinhood has changed the game. Young investors care about hypergrowth and disruption more than anything. When hypergrowth and disruption come together, for Zoomers, it would be the equivalent of if Drake hooked up with Taylor Swift. I don't know. I'm 38 years old. Do young people care about Drake and Taylor Swift? I don't know. Let me know in the comments. Robinhood reminds me a lot of companies like Facebook, Twitter, Amazon, Netflix, Groupon, LinkedIn from about 10 years ago, where everybody was scratching their heads with the valuations. They showed strong usership growth, but fundamentally, you can make an argument that they were overvalued. Some went on to be huge winners, others not so much. The point is, paying for order flow could get killed by regulators, but it doesn't matter. Robinhood is becoming a thing. It's changed the game for young people. There's going to be more and more cash running through this app. They're going to have more and more ways that they can figure out how to monetize this whole platform. Full disclosure, I have no position, but please let me know in the comment section whether I should go long, short, or just shut my mouth. And please smash that like button, subscribe, and hit that notification bell so I can make my 2 adult sons, Jay Lutz and young Justin, proud of me when they look down and see all those subscribers and likes. All right, thank you, everybody.